Have you ever wondered how some investors stay calm during a market crash, while others panic and lose everything? Howard Marks, a legendary investor known for his cool head, deep thinking, and long-term wins. In this video, we'll break down his 7 biggest investing lessons. Let's dive in! Number 1. Market cycles. The invisible clock of the market. Imagine there's a giant invisible clock ticking over the stock market. No one sees it, but everything follows it. This clock controls bull markets, where prices go up, bear markets, where prices fall, and everything in between. The tricky part? Most people try to predict what time it is, but Howard Marks says, forget the exact hour. Just know whether it's morning, noon, or night. In the 2008 crash, it felt like the world was ending. People were selling stocks like they were on fire. But Howard, he knew winter was here. And what do you do in winter? You prepare for spring. He bought when prices were low, not because he had a crystal ball, but because he understood the cycle was about to turn. Takeaway: markets rise, fall, and repeat. Don't panic. Don't get greedy. Learn to ride the wave instead of fighting it. Number 2. Second-level thinking. The difference between average and extraordinary. Everyone sees the same headlines, but what makes a great investor is how they interpret it. Howard's key. First-level thinking is simplistic. Good company equals good stock. Second-level thinking goes deeper. It's a good company, but is it undervalued, or is the greatness already priced in? Imagine 2 friends see a sneaker drop. One says, "Cool, let's buy it." The other says, "Everyone's rushing in. Maybe the resale value will crash." The second friend thinks ahead. That's second-level thinking. Real-world example. When Tesla stock exploded, first-level thinkers jumped in because it was trendy. Second-level thinkers asked, is this growth sustainable, or are people overpaying out of hype? Number 3. Risk greater than reward. The best offense is a great defense. Think of investing like walking a tightrope. You can do backflips and impress people, or you can just not fall. Howard Marks says the best investors aren't daredevils. They're cautious strategists. They care more about protecting their money than making flashy returns. If you avoid the losers, the winners will take care of themselves. During the 2000 dot-com boom, everyone was chasing tech startups with no revenue. Howard said no. People laughed. But when the bubble popped, most lost their shirts. Howard didn't. Why it works. He wasn't scared of risk. He just respected it. He knew the difference between calculated risk and blind hope. Number 4. Value investing. Buying $1 bills for 50 cents. This is classic Warren Buffett territory, but Howard Marks adds his own flavor. He looks for assets that are unloved, ignored, or misunderstood. He asks, is this company worth more than what it's selling for? If yes, that's a potential win. Imagine walking through a dusty antique store. Most people rush past an old painting. But you pause, you see the signature. It's a hidden gem, and it's on sale. That's what Howard Marks does with stocks. Example: in 2020, travel companies crashed. Everyone avoided them. But Howard knew the world wouldn't stay locked forever. He bought when prices were crushed. Later, those same stocks rebounded. Number 5. Contrarian thinking. The courage to be alone. This one's powerful. Howard says the biggest profits often come when you're doing the opposite of what everyone else is doing. But here's the truth. Being a contrarian is lonely. You might look crazy. Quote, you can't do the same thing as everyone else and expect to outperform. In 2008, people were dumping real estate. Fear ruled. But Howard's firm was buying distressed debt. Years later, those bets paid off big. Modern take. Everyone's hyped on AI. Maybe look at sectors people are ignoring. They might be undervalued. When others zig, you zag. but with a reason. Number 6. Patience and discipline. The art of doing nothing. In a world of instant dopamine, patience is power. Howard Marks reminds us, you don't need to swing at every pitch, just wait for your pitch. In fact, doing nothing is often smarter than doing something just for the sake of action. A tiger doesn't chase every rabbit it sees, it waits and pounces only when the timing is right. Investing angle. Most people panic in bear markets or FOMO in bull markets. Howard waits until the numbers in psychology align. No rush, just readiness. Number 7. Investor psychology. Winning the inner game. Markets aren't run by logic, they're run by people. And people are emotional. Fear, greed, panic, euphoria, all of these move prices more than earnings reports do. Howard Marks studies crowd behavior like a psychologist. During crashes, people say, "This time it's different." In bubbles, they say, "It'll never end." Both are emotional lies. Key skill. Howard trains himself to stay rational when others aren't. He doesn't get caught up in the craze, and that's how he finds opportunity. Key points. You can't predict, but you can prepare. Howard Marks isn't flashy. He doesn't try to beat the market by being faster. He does it by being wiser, calmer, and more prepared. If you understand cycles, think deeper, respect risk, look for value, go against the crowd, stay patient, and master your emotions. You're playing the long game like a legend. If you found this helpful, don't forget to like, share, and subscribe to the channel.